Howdy guys, Jimmy Song here. In this video, we're going to talk about central banking because this is one of those things that as I'm learning more and more about it just bothers me more and more how corrupt the whole system is. And I wanted to talk in this video about how central banks create and print money and because a lot of people, frankly, just don't understand it very well. So how does a central bank print money? Usually it starts with the government. The government has some sort of budget deficit. They only took in 3 trillion in revenues. They want to spend 4 trillion. Where did they get that extra trillion? Well, this is where the Federal Reserve comes in. They sell, quote unquote, the extra $1 trillion worth of treasuries to the central bank, in the US's case, the Fed. And the Fed basically gives them that loan. And that money didn't exist before. So it goes from, it adds $1 billion to its balance, or that, I mean, that's one way to do it. Obviously, the treasuries can be sold to the public, but whatever is left over, if they sell 500 million or $500 billion worth of treasuries to the public, the remaining always comes back to the Fed, and they buy it and take care of it. It's possible that $500 billion worth of treasuries goes to, is bought by people in China who have extra dollars from a trade deficit, or Europe or Japan or whatever. It really depends, and that they in turn use those treasuries as their reserves for when they lend out more money to their government or to commercial banks or whoever, as a way to create money. See, the thing here that's important to note is that every time there's a loan, they call it a loan, but in reality, it's newly printed money. More money comes into existence every time there's a loan, and central banks are no different than a lot of other banks in that regard. That, like when a bank loans you some amount of money for, say, like a mortgage or something, that money did not exist before you got it. So they create, if you're, borrowing $100,000 to buy a home, well, they just created $100,000, and now you have to pay them back, and that's the only thing that didn't exist before. It came into being as part of that transaction, which is kind of a really strange way to think about it. And this is why there's like credit expansion, but also credit contraction. Whenever enough people start paying back their loans, that's when you have the money supply shrinking, because every time you retire the debt, well, then that money that came into existence with the loan to you is now being retired, and that money also goes away. And but through sort of continuous loans, there's been an expansion of the money supply for years and years. So when you hear about something like the federal deficit being however many trillion it is, it's really a way in which the Federal Reserve has created a ton of money. I mean, some of that debt is obviously held by private individuals, but the Federal Reserve holds a lot of that debt too. And by creating money to fund that debt, they've created new money, and that needs to keep existing. Otherwise, there would be a giant credit crunch. There wouldn't be enough dollars to go around, and so on. It's something that a lot of people don't realize. Like, that's how money printing works. It's very elastic. It goes back and forth depending on market conditions and so on. And this is probably one of the things that's hurt the American economy so much, is that every time there's an expansion, there's a nice boom. Whenever there's a contraction, whenever like the business cycle changes, then you have this giant contraction, and you make everything even worse. So in general, governments have continually done credit expansion as a way to spur their economy, but that only works until it doesn't, at which point there's a black swan event and the entire system collapses. This is why we need Bitcoin, and this is something that I've wanted to talk about for a while. Anyway, hope that helps you. This song is done.